I hope you've been doing well and staying safe. We're going to continue this week our discussion on interest rates, what are the central banks saying, inflation, and obviously real estate as a whole here in Ontario and Canada. So much has happened in the last week from stocks, real estate, and crypto. It's just such a crazy time in terms of the price adjustments we're seeing in the market, and a lot of red, as I'm sure you're questioning your investments and your investment thesis or convictions at the moment. So definitely stick around for the full video. I'm going to go through definitely some inflation data, as I'm sure you saw what's been going on in the US as well. A lot has been said about mortgages in terms of affordability, where we're headed, and a lot of comments by experts and obviously the Bank of Canada. So stick around. If you have any questions for me, you can always reach out to me, Instagram or Twitter, or you can always leave a comment as well. Again, if you're looking for, this is not financial advice. This is obviously my perspective and the perspective of where we're getting this data from. But if you're looking for financial advice, I always say reach out to your trusted advisor, someone you can work with, someone you trust. If you're curious to understand my perspective, feel free to reach out to me as well. And any likes, any comments, and obviously your subscriptions will be greatly appreciated. So without further ado, let's kick it off here, guys. This is the first article here by Reuters from June 9th. So Bank of Canada says inflation to dictate rate moves, not housing prices. And as I've been sharing with you in the last few weeks, house prices have definitely adjusted and they're down. In the suburbs much more. Toronto has held up quite well. So just a few comments here I want to take you guys through. So hot inflation is the Bank of Canada's primary focus, as I've shared with you before. That is one of their objectives as it raises interest rates. This is from a senior central bank official who told Reuters this past Thursday, making it clear that the bank was willing to accept a housing market correction in order to curb consumer price gains. Senior Deputy Governor Carolyn Rogers, in an interview with Reuters, said higher interest rates will weigh on housing and highly indebted Canadians, but are needed to curb inflation, which is running at a 31-year high of 6.8%. So the Bank of Canada did raise their rates in June, on June 1st. Their next rate announcement is June 13th, and most likely 50 basis points for sure. But there were some comments this week that were quite interesting, and I'm going to take you through them very shortly. And on Friday, we had the U.S. Inflation print, which was energy and food prices drive U.S. inflation to the highest in 40 years. So the numbers we got, the May inflation came at 8.6%. The rise and cost of living has been squeezing households and putting pressure on policymakers to bring the issue under control. And that's why there's so much talk about interest rates. There's so much talk about inflation, because the central banks, including the Bank of Canada, need to get a control inflation. They lose their credibility if they don't, and they're going to continue on this track until we see the prints of inflation actually tame and adjust and come down. So talking about mortgages here, and this again a little bit more data for the US. This is from Yahoo Finance, and this, what date is here? This is from Wednesday, June the 8th. Mortgage activity hits a 22-year low as rising rates biting housing market. So US has faced the same. They've definitely seen house prices go up, not compared to obviously in Canada or particularly Ontario and BC, but they've definitely seen that. And now we're seeing the reversal of that, which is mortgage applications going down. So a closely watched gauge of mortgage application activity slid to more than a two-decade low last week as elevated home prices and rising interest rates dragged further on purchase and refinancing activity. And the Mortgage Bankers Association weekly market composite index tracking mortgage loan application volume sank 6.5% during the period ending June 3rd. This represented a fourth consecutive weekly decline and an extended 2.3% drop from the prior week. So guys, we're going to continue talking about this inflation and interest rates and how that's affecting mortgage and real estate. So they're all coming down. Asset prices are adjusting, as you've probably seen in the stocks and crypto. And next, as we're moving along, I want to share with you some comments here from Benjamin Tal, as his title of this article is Canada Home Prices, Why They're Falling. And this is from June the 8th. And if you don't know Benjamin Tal, he's the Deputy Chief Economist at CIBC World Markets. So house prices are set to continue falling across Canada as a result of the current market cool down, with the only question being by how much, according to a well-known economist, as Benjamin Tal. And these were comments he made to the Canadian mortgage professional that the decline in value will likely to be more evident among low-rise properties because detached homes and semi-detached homes have gone up more than condos. Although he said that it should be taken into context of skyrocketing price appreciation in recent years. Obviously, we've talked about price appreciation since the pandemic. He said, I think prices will go down in the low rise more significantly than in the condo space. It depends where you live, what kind of neighborhood, but you can see that low rise is already down 15 to 20%, and that's something that might continue, he said. Remember, we're talking about extreme elevated levels where prices went up by 50% in 2 years. So to see a decline of 15 to 20% is not crazy when interest rates are rising so quickly. And we've already seen this in the national home prices. That's been accompanied by the first drop in the national home price index since April 2020 by 0.6% between March and April of 2022 to come around at 866,000, with Southern Ontario markets such as London and Cambridge posting some of the most marked declines of 4 and 3.9% respectively. And this is from the Canadian Real Estate Association. So again, we're hearing from experts, they're talking about interest rates, they're talking about how it's affecting home prices along with other financial assets, and this will continue. And this is a tweet from June 9th from Rob McLister. He's a columnist and definitely someone very trusted in the mortgage industry, and I think he writes for the Globe and Mail, as you can see, mortgage columnist at Globe and Mail. And these were comments by Tiff Macklem, who is the governor of the Bank of Canada. He said here, Tiff Macklem, when asked today if households could handle a hike rate over 50 basis points, said the BOC may need to take a larger step. The next larger step is 75 basis points. Central banks don't make such statements loosely. So either he's setting expectations or they obviously are thinking about this. The OIS probability of a 75 basis point hike on July 13th quickly rose up nearly 50%. That is huge, guys. I've never seen 75 basis point hike. I don't know if you have or our previous generations have, but that's definitely going to be something new, and I'm sure that's going to shake more markets, and obviously on a Canadian perspective, but that'll be a huge move if they go 75 basis points on July 13th, but time will tell. Again, some more stuff from Bank of Canada this week. They had so much context. That's why I really wanted to highlight this for you guys this week. So again, from Reuters, June 9th, Bank of Canada, some Canadian could see mortgage payments jump by 45% in 2025 and 2026 as rates rise. And I'll take you through what that means. There's a bit of assumptions here. Some Canadians who took on mortgages in 2020 and 2021 could see their monthly payments jump by much as 45% in 2025 and 2026, given rising rates, according to the Bank of Canada scenario released on Thursday. Elevated levels of inflation, which is obviously 31-year high, could also mean the households allocate more of their income to food and gas if wage increases do not keep pace, the central bank said in its annual financial system review. Canadians with high loan-to-income ratio variable mortgage rates or rate mortgages will see payments rise by 45% in 2025-2026 upon renewal. The overall increase in monthly payments for all type of mortgages originating in 2020-2021 will be 30%. Guys, just a little bit of perspective here. I took out my fixed mortgage in, what was it, February 2021. 5-year fix. I got a great rate. This assumption, this increase in monthly payments is based on the assumption that mortgage rates continue to increase and stay steady in 2025-2026. My personal opinion, that's most likely not going to happen. I think the Bank of Canada obviously is trying to slow down demand. We most likely probably are in a recession or will see a recession. And when things get worse, the Bank of Canada probably will let their foot off the gas and say, hey, let's adjust interest rates. So I don't see them, increasing by our expenses for the mortgage increasing by 45 to 30%. But again, that's my perspective. And time will tell. And just a few final comments here. The scenario focused on mortgages with 5-year term taken out at banks in 2020 and 2021 when rates were at record lows. It assumed variable and fixed rates would renew at median rates of 4.4 and 4.5 respectively in 2025 and 2026. I don't believe we're going to see 4.4 and 4.5 for variable and fixed in 2025 and 2026. I really believe they're going to let their foot off the brake, but again, time will tell. And lastly, guys, here summarizing, it's kind of a bit on the same context, but I definitely did not want to miss this, which is typical mortgage payment could be 30% higher in 5 years. And again, this is from Bank of Canada, CBC. High house prices and debt loads associated with them are a major vulnerability to Canada's economy. The Bank of Canada said on Thursday, warning buyers who bought during the pandemic that the impact of even slightly higher mortgage rates could be dramatic. In its financial system review, the central bank said that while the country's financial system is strong and weathered the pandemic well, the economy remains vulnerable because of elevated debt levels tied to the country's increasingly expensive housing market. And I just wanted to just show you these comments, which is why I want to show you this article. Even as the average household is in better financial shape, more Canadians have stretched to buy a home during the pandemic. This is the Bank of Canada Governor Tiff Macklem said Thursday. And these households are more exposed to higher interest rates and the potential for housing prices decline. The bank said that assessing risks related to household debt levels has become more complex, but overall the vulnerability has increased. Roughly two-thirds of Canadians are homeowners, and half of them own their homes outright, while the other remaining have mortgages, attached to that. So again, guys, I hope you found this helpful. There's just been so much news this week on mortgages, and I'm sure you're talking about it. You're talking with family and friends, and I hope you found this valuable. So the three things I want you to take away from this video is, interest rates are going to continue to go up for the rest of 2022, at least it seems, and we'll really see what happens on July 13th. Inflation is really going to drive the conversation. If the central banks are not able to get a hold of inflation, it's going to put more pressure on them for more interest rates, be more aggressive, and financial assets are going to continue adjusting as we're seeing. And if you're a buyer and seller in the real estate market in Ontario and Canada, things have changed. Buyers have more options. Sellers are not getting over asking as a regular occurrence. Again, it depends on the market. Things are very different across the board, but you definitely need to take that into consideration. So I hope you found this helpful. Guys, any likes, any comments, I'd love to hear from you. And obviously, if you subscribe, it makes my day and keeps me motivated and keeps me going. So thank you for taking the time to watch my video, and I hope you have a great rest of your day and a great week ahead of you. Thank you so much.